certainly going to be making some forward-looking statements today. Nothing too futuristic here. I mean, everything I'm going to be talking about is going to be in the next few weeks to the next 3 or 4 months, because we've got nothing but catalysts lined up over the next few months, leading to what I see as being the single biggest re-rate potential that we've had since we hit on our very first drill hole into our project last year. As you can see, the end of August last year was very, very good for us. We hit our very first drill hole. It happened to be the single best drill hole in all of Nevada last year, where we drilled 30 meters of 1 kilogram per ton silver equivalent. As Dickens would say, it was the best of times and the worst of times, simply because pretty much right after that, it was when gold and silver both started their retracement, and we had a lot of headwinds. I mean, we went from 7 cents in March 15th of last year to $1.60 in the span of about 4 months. And we were churning through just so much profit taking, and then obviously the tide's coming out on the industry a bit. Now, what we've done since that is we've raised over $35 million in the past 16 months or so, and we've been deploying pretty much all of that back into the ground. And this money, we used to have to rely on piecing together small private placements. I'd be working the spreadsheet and chasing down subdocs from small mom and pop investors. Since last August, since we hit, we've gone 100% institutional. We've raised about $30 million since then, and we've gotten it from the likes of Eric Sprott, Keith Neumeyer, and most recently and most importantly, First Majestic Silver, which was a huge shot across the bow to, I guess, the rest of the industry, to show them that we're very much in play. Now, where we are today is quite interesting. As you'll see, I've got Santa Claus on there, and after the week and few months that we've had, it certainly doesn't feel like Christmas. But I'm not day trading, and I don't think you'd be listening to this either if you were looking for a quick flip. What we're doing right now at our point in development is trying to add value via the drill bit, de-risking the projects to the point where something is saleable that a mid-tier or major mining company is going to want to buy us out. And that's what, certainly we've done that in spades, at least in adding value so far. We've got 32 drill holes at the lab pending assay. And we've got a PEA expected sometime by Q1 of next year, which, as I said, will be the single biggest re-rate potential that we've had since we got started a little over 12 months ago. So what is this project? This is the queen of the silver camps. This is one of the most significant precious metals mining districts in all of the U.S., at least historically. This time 100 years ago, this district was the center of the mining universe before World War I. Everyone's probably heard of the Walker Lane district. Not many people have heard of the Tonopah Silver District, which we're in right now, simply because it's been hiding in plain sight until we were able to consolidate it and start drilling, picking up right where the historic miners left off. This district, historically, it produced nearly at 100-to-1 silver to gold ratio. So this is about as silver primary of a district as you can get. And our byproduct is gold, which ain't a bad byproduct. We're in Nevada, which, as many of you investors are probably investing in it for gold, but Nevada is a state because of the silver endowments, and it's very much a state because of the significance of the Tonopah discovery in 1900. Many of you have heard about the Comstock lode. Tonopah is right up there. It's the second largest historic silver district in all of Nevada. And frankly, given what we're drilling and showing right now, we think we can very much rewrite the history books. If you guys go on Amazon right now, there are countless books describing the significance of Tonopah within the context of the mining world. Now, what we're showing is, and I'll give you a reason as to why it's number 2, not number 1, but we're showing that these history books will need to be rewritten when all is said and done. So some of you might have seen me present a year ago here. Back then, we just got our hands on this project, and we were called Blackrock Gold at the time. We changed our name back in February of this year, it might have been March, on the back of the Fraser Institute rankings, which, after getting probably an email a day from investors saying, why don't you change your name to Blackrock Silver? It was these Fraser Institute rankings that really put things in perspective. And what that perspective was, Nevada ranked the number 1 destination in the world to be in the mining business, at least from an investor attractiveness index. But what I started doing was I looked at where all the other silver was produced globally. So on the right-hand side of your screen, you'll see the Fraser Institute rankings, those two columns. Nevada, number one. Now, if you look at the top 10 jurisdictions globally of silver, I mean, you got Mexico, Peru, Bolivia, Argentina, Chile, all these South American countries. And I realized that what we have going on in Nevada right now, based on what we're drilling, is absolutely one of a kind within the silver business, especially given the fact that we're just hitting silver and gold and at high grades at that. As I said, we're not doing any financial engineering on our silver equivalents. We're not putting lead or zinc or copper, anything of that. It's 100 to 1 silver to gold, and we're halfway between Las Vegas and Reno, with the highway going right across our property, and we're drilling on both sides of it. So this was a true discovery story. The district itself back then would have been in the effectively the middle of nowhere in the desert, and it was discovered by a rancher as part-time prospector and his mule that ran away, and effectively the story goes. He caught up to it and stumbled upon this big outcropping vein at surface, which led to some of the most significant discoveries in American history, both Tonopah, Goldfields, Bullfrog. It really revitalized the state at a point where 2/3 of their population had left right after the Comstock had petered out, and they were almost losing their seats in the Senate. Tonopah back in the day revitalized not only, I guess, Nevada itself, but it helped revitalize San Francisco, given the action that was going on there right after San Fran had been hit by a really debilitating earthquake. Now, the story of Tonopah itself can be told simply on this bar chart here. And now I don't want to, no need to look at the numbers too closely, but all you have to see is that hockey stick chart up. Now, these veins were discovered by that rancher, outcropping at surface. He started leasing out claims, and all of a sudden, you had the last real gold rush in America right before World War One. Within a few years, they were producing 14 million silver equivalent ounces per year, right before World War One came and knocked the wind out of them. But what you'll see, the real nail in the coffin for the district was in 1923 when they unpegged the price of gold and silver. Silver price went from about $1 an ounce down to 35 cents an ounce in the span of a few years. And it sent everything in the district belly up. And what's interesting about the district is it's pretty much all private land. So, the secret sauce behind what we're doing isn't so much in the exploration or in finding drill targets. The secret sauce was getting our hands in this in the first place. What you'll see on the lower portion of your screen there is what the district looked like in 1912. All those different colors represent different operating publicly traded mining companies. As I said, these were all of this land down here was privately owned. And effectively what happened in the late 1920s was a lot of big companies started coming in and consolidating all of this. Now, the purple claim package on your screen at the in the larger map there, that represented the holdings of a company called the Tonopah Extension Mining Company. It started gobbling up everything of significance on the western half of the district. And that's significant for two reasons. One is the discovery was made on the east side of district, and this is an east-west trending corridor of veins. So they started mining the veins from surface on the east side. All of that production, that hockey stick production I showed you in the last slide, happened in the east side of town, and everything moved westward. The west represented the blue sky. The west represented the where the last commercially operating mines were active, right up until metals prices tanked. And it pretty much represented all the good bits represented that new purple claim parcel there. Now, the Tonopah Extension Mining Company went bankrupt in 1930 due to all of the debt it had taken out to fund development. Now, why did they take out debt? Because they saw a significant amount of potential in developing the assets well beyond what they were doing in the day, meaning they were planning not years, but a decade into the future in terms of mining. When metals prices tanked, they couldn't pay it back, and someone picked up this claim package in 1930 and held it ever since. You'll see that yellow line going across the property. That's the highway that connects Vegas to Reno. Unfortunately, the last remaining member of that family that picked this asset up in 1930 passed away about a year and a half ago. We're the first group to go back in to get a deal on this property and drill our first drill holes in here. Since then, we've become the most active silver exploration project in North America. Our first drill hole was the best drill hole drilled in Nevada last year. We've since done 85,000 meters of drilling at the project in the span of about 14 months, and we're going to be delivering a maiden resource estimate by roughly year's end or so. Our only limitation now is just on one, our imagination, and two, on how quickly the labs can keep up with what we're doing. But as I said before, we've got 32 drill rigs, 32 drill holes at the lab. We've got 4 rigs turning, and if you ever drive that highway, you'll see our rigs on both sides drilling. Right now we're next to a Chevron. 2 weeks ago, we were next to Burger King. You're not going to find a better infrastructure in any mining project. In fact, if you did, it'd be it'd be very, very hard pressed to do. So what have we done in the last year? I said we've done a lot of drilling, but what has that hit? We've now hit 10 veins, ranging in size from about 425 meters up to 1.5 kilometers in strike. Now, in terms of grade, we've hit absolutely phenomenal numbers. We've hit about 80 significant intercepts, and we're using a cutoff grade of 200 grams per ton. So that's what we think would be mineable grades. We've hit up to 4.6 kilos, 26 grams gold, multiple intercepts over 2 kilograms pure silver. What you'll see here in this polygon yellow unit here, this is the area that we're drilling out right now exclusively to incorporate in the resource. Now, the reason we're trying to drill this out as quickly as possible is, one, it's going to allow us to backstop our valuation, meaning right now, we've gone so quickly that analysts haven't been able to keep up with what we're doing. So what we want to do is show the market that we truly have ounces in the ground at really good grades. Obviously, being on private land in America is a huge, huge advantage. But we're also going to be showing all this upside because, we've hit 10 veins so far. We're only going to be including about 5 or 6 of them in this resource, meaning we'll have built-in upside too. And what we're trying to show with this drilling is that the juice is going to be worth the squeeze for us to keep the pedal to the metal next year and look at going underground. Driving our own exploration decline and giving us access to both sides of our property so we can start turning all of the veins on our project into Swiss cheese from underground versus from having to drill 1,500 feet above surface. So this is the area here that we're drilling out for our resource. What you'll see is a tightly spaced corridor of veins. This was the last commercially operating mine in the district when things went belly up. In 1930, and the company went into receivership. And effectively, what we did early on in our drilling was just go for a proof of concept. That proof of concept was simple. We believed, and all of the historic reports said, that they did not stop mining because they ran out of gold and silver. They stopped mining because of the business aspect of it. Well, we've now hit up to 1.5 kilometers of strike extensions on these veins where they stop mining. If you laid this area end to end, you'd have about 5 kilometers of mineralized strike and at some really, really good grades and widths. The biggest vein in this one is called the Merton vein. This is the one that's 1.5 kilometers in strike. Now, all of these veins in this area, if you average out all of their intercepts, they average at about 3 meters thick. So on Merton, you've got something 1.5 kilometers in strike, 3 meters thick. And if you see top to bottom here in terms of this high-grade mineralization, it goes about 4 football fields. This is absolutely wild. The ounce potential here itself in Merton has a potential to target well above 100 million ounces when we're all said and done with it. Now, we won't be able to include all of that in the resource, but the potential here is still quite large. And then the best part is we've got 9 other veins that we've hit. I mentioned that we've got that polygon unit, but the actual vein that put us on the map with our first drill hole was the Victor target. And the Victor target is where we hit that 29-meter intercept of 1 kilogram per ton on our first drill hole, in addition to 2 other thick vein zones. What I'm showing you is just trying to impress upon you that what we've got right here is something that is showing scale, it's showing size, it's showing grade, and we've got nothing but catalysts lined up starting in the next few weeks here, ending through the end of the year with our maiden resource estimate that I think people looking at this now can stand to potentially make some serious gains.